when we started bailing out, when our bank started failing, and that's what got me a lot of media attention in 2008 and 2009. I had to think about a 452% return going into the first quarter of 2009, unleveraged by options, simply by putting options on all the banks that had went fall. Unfortunately, I lost half of that in the rally, but it was good going into it. When those banks started failing, the recipient of a lot of the Fed liquidity were the European banks, because of the interconnections between the European banks and the U.S. banks.
How are you preserving your capital?
But I could tell you now, this is not a time to try and make money. If you take a look at the big brand names, such as the Ackman, Paulson, etc., they've been getting their heads handed to them. It's very difficult to trade. Whether you're short or long, you probably lost money throughout October and November. You could be absolutely right, but the volatility will either force you out of your position or force such a large drawdown. If you're a human, you lose your lunch anyway. I think it's done by design to prevent people from piling on the negative side, but that's X-file speculation, so I'm not going to go into that right now.
What do you mean by design? I mean them manipulating it?
Manipulating to make sure that too many shorts don't pile up like they did in 2000, like guys like me jumped in 2008. Unfortunately, I don't think that's the way to do it, because let the markets work. When you feel a lot of people get on the short side, once things come to equilibrium or overshoot, you have a liquidity cushion. Because people have to cover their shorts to take their profit, which is buying, and that's surplus prices. Without that, prices simply keep falling. There's nobody there to catch it.
Yeah.
But I wouldn't say it's unfounded, but it's conspiracy theory.
So to try to just make a story about what happened here very simplified. They're a bunch of kids, they were playing past their means. They now are accountable for it, and instead of paying up and admitting to what they did, they might just pull out their guns and say, no, it'd be spoiled brats.
Well, I
Is
think that.
I mean, it's human nature, that
Yeah.
it expressed as adults also, because adults do that kind of stuff too.
Yeah.
It's more like Greece was a subprime lender, borrower.
What?
It's more like Greece was a subprime borrower. They bought, the plasma TV, the new car, and everything.
Yeah,
and
more
just
than they
blew all their
possibly
money.
could.
But they were given prime rates, though.
Right.
At the height of the bubble, they were borrowing just a few basis points away from the
But
ball.
they're not willing to pay for their misdeeds now.
Right,
They're
and
saying,
they
we're gonna
can't
take
because
everybody
they
else
don't-
down if you
they
make
can't
us
pay
play.
because they don't have
Let me
big
finish,
enough
let me
economy.
finish. They're saying they're going to take everybody else down if you make us pay, and we're gonna start a war, essentially. Is that?
Well, they're not saying we're going to start a war. They're
Well,
saying
be a
we won't
catalyst
pay.
to something that could create
Right.
a complete nationalism throughout Europe and take them back 30 years. or
So let me
40
play
years.
devil's advocate. What is Greece doing wrong? What are they doing wrong that everybody else wasn't doing? Germany is trying to force austerity packages down the throats of Greece. Nobody told them, if I think that you're a bad risk, I shouldn't lend money to you. If I lend money to you, I deserve to lose it.
Right,
Why are you blaming Greece?
right. Yeah, it takes two. It's
So,
stupid on both
it's
sides.
easy for everybody to jump on Greece, but, someone has
It's
to lend
greed.
money.
Again, they thought, oh, we'll make some money, or at least they want to fall for a while, make money today, maybe in the future we won't have to worry about it, that kind of thing.
Yeah, because they rely on bailouts, so you expect a bailout.
Yeah.
Reggie, why do you think that, obviously you're analyzing these things and you're coming to these conclusions, and like you say, 2 + 2 = 4. How is it that this isn't more prevalent? Or maybe it is, and I'm not in the industry enough to know. But is it that those institutions are too embedded in that system that they don't want to admit, and that's why it doesn't get reported enough? Or is
Well, which institution?
I'm saying,
media
like-
or investment.
I guess investment. In media, I sort of already know the
Well, you have
answer.
to understand, investment houses that you normally get research from, you don't pay for the research. They're giving it to you, and you get what you pay for. Okay, so research for investment houses are simply marketing. They give you research. Hopefully, if you follow the research, you do what they want you to do, and what they want you to do is create an action that either generates commissions, spreads, or fees, or somebody to sell in an outsized doodle position to, basically.
So it comes down to a forced growth. They have to show growth, whether it's the truth or not. They'll lie if it doesn't take place, and they're just pushing it off to another day.
Well, it's simpler than that. I have, for instance, I think that Apple is, their growth rate is going to drop significantly soon. I have a bunch of Apple stock. I need to get rid of it. I issue a blaring report. Apple's going up to $650 a share. The best thing since sliced bread, the iPhone 4, 5, 6, farts, pixie dust, etc. right? I give it to you. Hey, I buy a bunch of Apple stock. You go buy Apple stock. I just so happen to say, hey, you know, our brokers have some Apple stock. Buy this. I eliminate my Apple position, and then once my Apple position is eliminated, Apple stock drops. You know, and I'm going after you buy it back cheaper, possibly from the same person I sold it to, all based upon the research report. How much did you pay for the research report from Apple? Does anybody have a brokerage account with a big 5, 4, 3? They're dropping now. You have one?
Yeah.
Do you get research?
Yeah, sometimes.
Yeah, how much you pay for it?
Nothing.
How much is it worth?
Well, that's actually my question. Do these bank analysts have any incentive to, like, when they go on television or make an interview with a newspaper or something, do they actually have any incentive to give the right answer?
No.
Well, it depends. I mean, you know,
What's the
you know,
right
if you
answer?
never get hungry and don't need to eat and you don't have kids, and,
Right.
you know, independently wealthy,
Well, like
never
from-
want to work in the business again, you know.
From the point of view of a bank who hires an analyst, what does the bank expect to get out of the analyst?
The bank expects the analyst to support the trading and investment banking operations.
So really, the only job that the analyst has to do is issue some kind of statements to the public that encourages them to trade with that bank, perhaps, and generate some commissions for them. But it doesn't really matter whether that advice is going in the right direction or not, as long as it continually convinces people to keep on trading.
The right direction is a direction that generates commissions, fees, manages the inventory, or creates investment banking business.
Right. So whether
You know,
or not
for instance, you can have a
actually
negative
go away.
40% return for the client, but if you were able to do 3 underwritings, you got rid of a large position that was illiquid in the bank, and you generated, you know, $350 million commissions for the brokerage force, you get promoted 15 times.
But that's not conspiracy theory too.
It's not conspiracy. You know,
It sounds like it should be.
you could go to my site, pull up Reggie Middleton versus Wall Street. I've run circles around all the Wall Street banks, all of them, 4 or 5 years running. I'm talking twice the return. You know, I run between 1 and 4 analysts max in me. You know, bachelor's degree from Howard University. All the bank analysts.
And when you work.
That's an awful hell of a coincidence, isn't it, right? I'm a bright guy, don't get me wrong. I also think I'm handsome too and the world's best lover, but, you know, in reality, if you step back, it's a good chance that instead of being that good, the bank's goal is not necessarily to get the best return for the client, but to manage their business. This can be told because when was the last time you consistently got something of value for free without paying for it? Tell me. Outside of your research, can anybody think of another incident? Usually when you get something of value, somebody wants you to pay for it because it takes money to generate it. Then it's a profit margin issue. So
No,
you keep getting
beware of
something for
free
free.
bikes.
Yeah. I did a show for VPRO, which is technically, which is like the BBC or the PBS for Holland, the Netherlands. And at the end of it, I explained to everybody that I have children. I tell my children that you know, nothing is truly free. And usually things that are given to you for free are the most expensive things that you'll get. It's just that you're not aware of how much it costs. By the time you finish paying for it, you realize exactly how expensive that free item was. And that's generally the way to make it very clear to anybody. Never follow anybody blindly. Always do your own research. It's just not smart. It's not a good idea. Particularly if you get something for free. Nobody can afford to give out anything of value for free for any particular amount of time, unless it's not free. They're compensated somehow. Usually, I tell my children, the free things are the most expensive things in the world. And after you finish paying for it, you then find out exactly how expensive it was and how it wasn't free.